Hello, my name is Sam Albanese, and I'm with Oliver's Learning, and today we're going to talk about the temporary insurance agreement. Now, this is a very, very important agreement because basically what it comes down to is that every insurance policy, whether it be life insurance or whether disability insurance, always has what we call a TIA, or temporary insurance agreement, okay? So the objective today is what is the TIA, who issues the TIA, what is required for the client in order to qualify for the TIA, what is the purpose of the TIA, why we even bother with it, so to speak, and what are the conditions that are required in order to qualify for the temporary insurance agreement, okay? Now this is a very, very important agreement, and it's a legal agreement as well, so it is important that you understand why this is an important aspect of the insurance industry. So let's get ourselves started here. So the TIA is one of the most important documents, of course, that, in every, like I said, every disability, every life insurance policy, they all have TIA. Okay? So once you finish making the sale and the application is basically set up, you might say, you as an agent are really entrusted now with the responsibility of issuing the temporary insurance agreement. Now, the temporary agreement is in place in the event, obviously, the client dies during the underwriting process. So if you ask and say, why even bother with the TIA, the reason why we do it is that clients can die anytime. So between the time you leave the house, the time you actually deliver the policy, that client might die. So the question is, am I insured during that period of time? Well, obviously, if you issue the TIA, the answer is going to be yes. You have in fact coverage and everything. But nonetheless, some conditions apply, as they always say, okay? So remember that the TIA is a separate insurance agreement, okay? It is something that is clipped out of the application and given to the client. The rest of the balance of the application, of course, will go to the underwriting company, but the TIA, of course, stays with the client. So let's move on and see what I'm driving at, okay? So first of all, in order for the TIA, in other words, in order for you as the agent to actually basically give the TIA to the client must pay at least 1 month's premium with the application. In other words, consideration has to be there. And that consideration is at least 1 month's premium, okay? Basically, also, you're walking out with an application in your Tasha case with the first month's premium, okay? Minus, of course, the TIA because you gave the TIA to your client, okay? Now, the client obviously has reasonable reason to believe that at that moment they are insured because you said, here's the TIA, you're now covered, essentially, okay? But again, where's the proof? And that's the purpose of TIA, you see, is that the client can now say, yes, I have something tangible in my hands. It isn't good enough just for you to say, no, you're covered. The TIA basically is an attestament to the fact that you, in fact, do have coverage at that point, okay? So the TIA obviously will pay out if everything is right from the insurance company's perspective and everything. So that's going to be an important thing. And again, you'll see this in a moment, okay? So you as the agent, okay, play an important role in all this, okay? So there's two parties to here. There's the agent's role and, of course, the client's role. In the TIA, there's usually about 5 or 6 questions. So every TIA has roughly about 5 or 6 questions. So that's very important, distinctions in terms of the different kinds of ailments that the person could suffer. So you must make sure that you read the questions very carefully for the client, so there's no misunderstanding about what we're talking about here, okay? Now, these questions, of course, will confirm the applicant's good health and that they have not been in hospital or ill. In other words, they don't have anything to be concerned about. In other words, the agent must have no reason to believe, so you as the agent must have no reason to believe that there was any misunderstanding or lying. In other words, you have every reason to believe the client is actually saying the truth. And that is important, and that's something that you as an agent must ascertain at that point. Remember, you're the point of sale, so obviously you're the one that has to ascertain this, okay? So now, if the agent feels that the client has been truthful, told everything that has to be said and all this here, the TIA will be issued by the agent. The TIA, of course, has a policy number, as all contracts have, okay? And so now you really do say to the client, okay, you have insurance, Mr. Client, you have insurance, okay? There's proof that there's an insurance. In other words, you gave them something tangible, okay? The agent will ask the client a series of these questions, like I say, look, I've completed all those here, and the client would have answered all these questions truthfully. So therefore, from your perspective, there's no reason for you not to issue the TIA. Okay? The purpose of the TIA, of course, is that if the client dies between the period when the agent leaves the house, basically, to the time the contract is delivered. Now, remember that in order for the TIA to become effective, the TIA will pay out only as long as the policy was, in fact, going to be issued standard. In other words, if by chance it wasn't going to be issued standard, then the TIA will absolutely be canceled. So it is important to make sure your client understands that the TIA is in effect as long as the company would have issued the contract standard, basically. So the TIA is not going to cover the client absolutely for everything. I mean, there are going to be limitations and everything. So once again, you should look at your company policy and everything else, okay? It also provides limited amount of coverage, as you'll see in a moment. But the most important thing is that the TIA assumes that it is going to be standard coverage, not substandard, not conditional or anything, but it will be a standard contract. Failing that, then you should not issue that TIA. Now, the TIA also has an expiry date. Normally, the expiry date is 60 days from the date that you actually leave the client's house. In other words, you date the TIA such a date, and the clock starts ticking for 60 days. There are some companies that may go to 90, but again, look at your company specific to see, but the vast majority is 60 days from the date that the TIA is actually handed over to the client, okay? The insurer then will, once they receive the application, minus the TIA, of course, will then, of course, start doing the underwriting and everything else. But if by chance the insurance underwriting process takes longer than the TIA, so in other words, the 60 days, the underwriter may, in fact, send back the TIA letter basically saying, that we could not complete it because during the appropriate time and everything else. So they may end up canceling the TIA at that point. But essentially, for the most part, most contracts will be issued within that TIA period of time. So you should, again, pay attention to that aspect of it, okay? If something, however, is discovered during the underwriting process that prevents a standard contract from being issued, then the client will not be covered, of course. The insurance company would issue a registered letter, refund the client their premiums, and basically say that the TIA has expired. That doesn't mean that the company will not issue anything. They may issue a substandard contract. But remember, I said to you earlier that the TIA must be a standard contract. So basically, the insurance company will simply say the TIA is no longer in force. However, we will proceed with the underwriting, and we'll get back to you basically at that point. So the TIA is canceled, basically, in other words, does not provide any coverage at that point, okay? So and hopefully, if all is well, the insurance company then may end up making a counter offer at that point. But again, that is be subject to the insurance company's underwriting practices and everything. So it's very important that you explain to the client that there is not 100% guarantee. This is a common mistake to say, okay, you're covered. Well, not necessarily. As I said, there could be some mitigating circumstances. You have to be very careful that you don't explain tell the client that it's 100% guaranteed, because it is not. There are a number of conditions attached to the TIA. So the TIA may also pay lesser of the TIA and the amount the client is applying for. So for example, if the client buys $1 million life insurance policy, but the TIA only says $500,000, and the person does die during the TIA period, they're not going to get $1 million. They're going to get $500, because basically it is whichever is the least is what actually happens. So you'll see an example of that very shortly. So here's a client. He applies for $1 million policy, and every indication is that they will be approved. In other words, you as an agent have no reason to believe that there are going to be any problems, okay? However, the TIA only has a $500,000. So once again, you should look at your company to see what is the maximum that the TIA will cover. Some companies will go as low as $250,000. Some companies may go up all the way to $1 million. So take a look at your company specific to see what is the TIA maximum. So let's say it's $500,000, our example. So if the client dies during the TIA period, they will receive the $500,000 because the TIA will pay the lesser of what was applied for or the TIA amount. In other words, we applied for $1 million, but the TIA only said $500,000. So as a result, you're only going to get $500,000. So in other words, meaning that basically it's always the lesser. So if, for example, the client only applied for $250,000, then obviously they're only going to get $250,000. It's always the lesser amount. Okay. So as I said earlier, there are limitations basically to the amount the TIA will cover. So you always need to make sure that you look at your company specific, okay? But the main thing to note is the TIA will cover for the lesser amount of what is applied for and what the TIA actually says, okay? So what is the purpose of the TIA? There it is right there. Total peace of mind. In other words, the TIA provides peace of mind that if something tragic happens to the client while the application is processed, the TIA will click in, basically, okay? So at the end of the day, I hope that this lesson has given you some indication of why the importance of the TIA. Now, there is a second part to this, which you will do subsequently. In the meantime, see you next time.